Eric Robertson is Global Head of Research at Standard Chartered Bank and joins us live from Sydney with his assessment of everything that's happening right now. Eric, great to see you. Thank you very much for your time. I would want to start on what's happening in the US, but I'll keep that for later in the interview. First, let me address the resurgence of concerns and virus cases in this part of the world. How does that set into your own outlook for the recovery story here in Asia?
Well, look, you make a good point. There's certainly been a little bit more anxiety, if you will, about the recovery story, the reflation narrative, and COVID infection rates have certainly played a part in that. I would point out that in a number of the countries where you have seen a few flare-ups recently, governments have been very quick to act and get things back under control. If you look at the economic data, which is coming out for the first few weeks of the year, exports out of Korea, for example, you're still seeing very good momentum. And so I think our base case is largely unchanged, which is, yes, it will be bumpy at times. Yes, there will be periodic setbacks, but overall, the economic narrative for this part of the world looks very, very good to us for the first half.
Right. Given what happened in the U.S., and if you can show this graph to our viewers on the wall, we saw that initial V and a dip after that coming in, Eric, in the numbers. I wonder if we are stepping into that mode of a double dip slowdown.
Look, I wouldn't call it a double dip. I mean, the thing that we have to recognize is that the pace of contraction last year was so dramatic that any recovery this year, by comparison, will look like a very sharp V. In other words, what we call base effects. Now, as the base effects start to fall out of the data and as some of the pent-up demand starts to subside, it's only normal to see some sort of a plateauing or even, statistically a mild setback in the data. But I wouldn't confuse that with a double dip recession. I think it's going to be a process of normalization over the course of the year, which in our opinion still points in the direction of, better economic momentum and better recovery.
Right. The conversation, I believe, is now shifting from not just growth going back to pre-pandemic levels, but also going back to the pre-pandemic growth path. And so for Asia, how do you see that story moving?
One of the sort of interesting themes under the surface has been the recovery of trade and exports, and specifically within the region. So emerging market countries trading with other emerging market countries. And, from that point of view, trade volumes and export volumes got back to pre-COVID levels within a couple of quarters. After the global financial crisis, it took 2 years to see a similar recovery. So the pace of improvement, we would argue, has been very quick, certainly for the region. And we would expect that trade, exports would remain a key part of the growth story. Now, obviously, we want to see an expansion of growth away from just exports. And that's where fiscal stimulus and monetary stimulus come in, both of which we expect to remain in place throughout the year.
How important is that near $2 trillion stimulus in the U.S. for demand here in Asia and for Asian exporters?
I think that's a fantastic point. One of the things that we have argued is that fiscal stimulus in the U.S., whether it's 1.25, 1.5 trillion, doesn't matter as much. What's interesting is that it will be largely income supportive. And in our view, that means that consumer spending and the demand for goods out of Asia will remain very strong. So from an Asia point of view, that's excellent. From a U.S. point of view, yes, growth will improve, but the trade deficit is going to continue to deteriorate. And it's one of the reasons why we maintain a fairly negative view on the dollar.
What is your view on the dollar then for the better part of 2021?
Depreciation. Certainly in the first half of the year, we would expect the dollar to continue to be weaker, especially against emerging market currencies. In G10, currencies like euro and sterling, we think will struggle to achieve much upside. Over the course of the full year, I think some of the momentum for dollar depreciation may subside a little bit in H2, but that's largely a function of our expectation for the U.S. economy starting to reopen in a more pronounced fashion, and so catching up to Asia, if you will.
Right. Do you think that the economic outlook for APAC largely would broaden out away from China, Korea, perhaps Taiwan, to India and ASEAN through 2021?
We do think so. As I mentioned earlier, a large part of the export story so far has been really two major sectors. One is medical equipment and personal protection equipment. The other is technology. If you look at some of the economies of ASEAN and South Asia, you mentioned India, Singapore as well, Malaysia as well. Trade is a big part of the Malaysian and Singapore economies. For India, vaccine production and the manufacturing of vaccines, I think, is going to be an interesting component of the growth recovery. So again, I think you're right. I think we will see a broadening out of the recovery across, sort of APAC more generally.
Right, Eric, I know equities is not your thing. You're more on the research side. But even though I want to get your views in on what's happening in the U.S., the role of the regulators and the kind of dislocations, distortions this is creating in the markets.
Look, I guess the way we would approach it is in a similar fashion to other VAR shocks or volatility shocks that we've experienced over the last number of years. Whenever you have financial assets driven by excess liquidity, which appears to be the case today, you're always going to have examples of individual securities or groups of securities that are vulnerable to some of these movements in liquidity. And so some of the dislocation that I think we've seen more recently is a reflection of that. We don't believe that it will be a systemic problem, which I guess is a fancy way of saying we don't think it's going to spread to other markets more materially. Yes, cyclical assets like commodities, emerging markets have experienced mild corrections, but I think they're relatively mild compared to some of the dislocation you describe in the U.S. So I would argue it will be a passing event. It should be, we think it will go back to normal trading conditions over the course of the next week or so.
Okay, fair enough. Today, at least, we've felt some ripples in this part of the world to what's happening in the U.S., but I'll take your word for it that this may not be a deep underlying issue. Thank you very much, Eric, for joining us with your take on the markets.